Hello, everyone. Welcome to today's session. Yeah, sorry about that. We had a bit of technical issues, but now we are set up. We had quite a lot from yesterday's NFP. So just a brief check. If you can hear me clearly, just say hi. Hello, Threads, Trapsket, seeing Wycliffe, Mitty, Francis. So welcome to today's session. Nice to see you guys in the session. We're going to cover what happened last week. And then also what to expect next week and how the events have been for the better part of the week. So let me just get this first, and then we have a recap of the charts. Okay, so just a minute. Yeah, so over the weekend, we had a bit of major news coming up, and that changed the whole direction for things like gold. Remember, one thing that you need to notice about gold is if I go to the weekly time frame, this peaks over here. So let me just point this out. The 3 times gold went all the way to 2000, above 2000, was number one in 2020, and then during the whole thing with the Ukraine, and then we had a banking crisis earlier in the year. So usually gold tends to shoot up when we have some major geopolitical or just some major news in the markets, or actually just major news. Yeah, and that's why over the weekend, what happened again? So that from Friday, we gapped up in the market because of all the geopolitical events that have been happening. And this is why gold just immediately changed direction from Monday. And this is something we usually comment about. When you're holding trades over the weekend, it's always cautious to know that anything can happen during the weekend and you're not able to close trades because the market is closed. So what ends up happening is, in case there's a major event over the weekend, usually the risk increases exponentially. So it's usually good by Friday, if you're not swing trading over a long term, to close your trades and then just come back again on Monday and start from there. So it's very prudent to do that as a trader. And we had this gap on Monday. This is gold. So I'm using period separators here. So on Monday, I remember a lot of guys were attempting to sell the market to fill this gap over here. But remember the tension around the news and everything, it hadn't faded away. So whatever caused this to gap up didn't fade away. Yeah, and that's the reason why we didn't end up filling this gap, and we just continued going higher. Another thing that might have been a factor to sustain this trend is this entire area here. If I look on the daily chart, remember that gold usually sometimes trends very weirdly. This entire area from here to here, there is not a single bullish day. So gold had fallen 1, 2, 3, 4, 5, 6, 7, 8, 9. It's around 9 trading days. Yeah. So that's also probably a catalyst why you are seeing this reversal over here. But mainly, it's probably the news, the geopolitical news that happened from, I think, Saturday morning last weekend, and is kind of spooking people off. So usually, again, based off of this pattern alone, we're able to explain that when there is fear globally, people tend to buy gold, and that's why gold usually spikes up. So this is around March of 2022. This year is 2020. This first area over here, and then this last one here was earlier this year when we had a few banks in the US collapsing. Yeah. Now, does that mean we should expect this trend to continue? Depends on how the situation unfolds, but usually what a common trend is, usually the market tends to overreact to major news, and then it sort of comes down after that. So with gold, it's the same thing. I think once the market has come down, we should see a continuation based on other fundamentals. And that's one thing that we will be looking at today when it comes to gold. So just before we talk about that, let's talk about dollar. So here it's saying geopolitics may start to take over. Yesterday's US inflation figures triggered a rebound in the dollar, but markets are endorsing a dovish stance. So the dollar may not rally. So there's that aspect of yields that we will talk about. Geopolitical volatility, however, can however favor defensive currencies. So let's just dive into that first. So of course, yesterday we had the CPI coming out, which was a very good and straightforward trade here. We had, I think my chart is still stuck on yesterday. Okay. Yeah, so we had CPI coming in hotter than expected at 0.4, and then the yearly reading coming in at 3.7%. The core, however, remained the same. Remember, the core CPI is CPI that excludes energy and food. These ones are the most volatile. So having said that, if we go back to this, before we talk about the geopolitics and everything, here they are saying the report turned out to be the tipping point for the dollar correction, as we had expected, as discussed, blah, blah, blah. And then here they're saying, yeah, so it came in hot. That's okay. The bump was mostly due to hotels and motor insurance prices, which will subside, but will still complicate the disinflation narrative. That one we've been discussing. Here, the market for now remains very cautious when it comes to pricing in more Federal Reserve hikes. That's a very important statement. Why? Because if you look at the Fed Watch tool, remember last week when we were looking at this, the possibility or the probability of having an interest rate hike, here when it comes to probabilities, was around between 18 to 20%. That was last week. Right now, it's gone all the way down to 9.7%. So the market is sort of thinking we might not have an interest rate hike going forward. And that is now explaining why we are seeing the dollar sort of weakening, the dollar sort of erasing some of those gains it has made for the better part of the year. Now, this again is very important because it's going to guide you on how to think about the dollar strength. If this one is increasing, then chances are the market wants to price in higher rates. That means a stronger dollar. But now the probability of us seeing another hike is at around 9.7, which is very low. However, probability of us seeing no change here is at 90%. So the market is saying there's a high likelihood that we will remain at the same level. Yeah. So let's go back to this article here. So it is important for us to know the probability of interest rate hikes because it helps us gauge the strength of the dollar. Last week we said chances are we might continue seeing dollar strength, but the narrative has slightly changed this week based on number one, what happened over the weekend, and number two, the story on yields. So that was another thing we said we need to be looking at very carefully when you're trying to build a narrative with regards to trading. So let me just adjust this like that. So the yields have come down since we last discussed, or since we last talked. So this spike up here was yesterday's reading, but we've seen sort of cooling down in the yields. Now, I'm going to tie that with this article over here, where it is saying the implied, okay, now this we've already discussed. The implied effective funds rate in the market for December is almost unchanged. It was at 5.4 this morning. The narrative pushed by the Fed officials that higher market yields will do the tightening appears to be well cemented now. Now, what does this here mean? Again, these yields, this is the US 10-year Treasury yield. It's how much you're making when you invest in a government security that is 10 years. And in this case, it's the US government 10-year yield. Now, the thinking is, instead of raising interest rates by the Fed, the market can do it. Yeah. If you sell bonds, you end up having high yields. And high yields make bonds other things less attractive, because you will be comparing them to risk-free 4% a year. Yeah. So higher yields can be an alternative to high interest rates because this has the same effect. Yeah. And that's why the article is saying that the Fed here, the narrative is, instead of them continuing to raise interest rates, they can just let the yields do its thing. Yeah. And that's why we are seeing the market not really pricing, it's starting to cool off from the narrative of a strong dollar. So this new Fed stance probably means that there will be some reluctance to follow yesterday's dollar rebound for now. So that means, let's look at this chart again. This chart over here. What was the yesterday's dollar rebound? If you look at these charts carefully, yesterday during CPI, we had this move going down like that over there. Yeah, so they're saying that there might be some reluctance for us to continue expecting that. This one going down, especially on the daily. Yeah. However, it's still a possibility, considering technically, if we see a change in the trend, then this is where we might want to check the prices. But at the moment, they're saying there's a reluctance, and that's only showing on gold. If you look at these other currencies, they have fairly behaved because the reaction wasn't there. See, for example, GBP USD. In this case, we have had this Monday, Tuesday, Wednesday, Thursday, today's Friday. This move here alone correcting the entire week's uptrend. Yeah, so it was very straightforward with GBP USD, where the stronger reading corrected, but that's not the case with gold. Yeah. If you look at USD JPY, this one was already weak, but again, we spoke extensively about this, and we said we need to be careful trying to go buying this currency, because every time it gets too high, there's a high likelihood that the central bank might intervene. So this is on the monthly chart. Yeah, so for USD JPY, it's usually very straightforward. You just know the major levels for this are between 150 thereabouts. So let me just zoom this out a bit. Yeah, from around 150, you should start expecting some sort of concern from the Bank of Japan. When the currency is too weak, remember, this one usually trends very well with the Kenya shilling. Yeah, the moment it's at 149, Kenya shilling is there about 147. So it's usually mostly 1-to-1. However, they have more money to play around with. That means if they wanted to start selling USD to make Japanese yen stronger, they might attempt to do so. I know last week there was guys thinking that we had an intervention with this down move over here. So remember, there was this move on USD JPY that people are thinking it's an intervention. We still have to be careful about it. Yeah, so from around 150. So if you're trying to play a stronger dollar, this might not be, for risk purposes, this might not be the strongest, this might not be the best pair to do that with. So you'll need to be very careful with this. However, GU and Euro USD, these ones are very good candidates to look for moves. So in this case also, with Euro USD, it played out fairly okay. If I go to the daily, like that. Remember, we said we're expecting a downtrend, this one. So I'll just use this instead. Just a minute. Okay. I think it was like that initially. We had this downtrend on Euro USD. So we are trending lower, the likes, and then last week we broke because of that sort of repricing that maybe the Fed might not continue hiking, the yields and bonds will do that work. Yeah. So we had this push upwards during that week. Mind you, this time we had a gap down. So it tells you why gold, we gapped up. Yeah. So again, the CPI reading made us erase all of last week's. This week, sorry. This week, this was Monday, Tuesday, Wednesday, Thursday. Then when the CPI reading came in, it just erased everything back here. Now, in this case, the statement here is there's some reluctance. Where is it? There's some reluctance for the market to follow the dollar strength. What you would want to do is to just look at, before even November comes in, just look at this. If we see probability of another rate hike increase because of any news whatsoever, then that might mean dollar strength. At the moment, this is the lowest we've seen it in weeks, 9.7 probability. Yeah. So that means we might expect not such a strong dollar in the coming weeks, unless this point here starts to rise again. So at the moment, it's at one of the lowest levels I've seen it in the recent weeks. So that means that if I'm coming to the charts here, I'm not quite going to expect a strong dollar per se. I'm not going to expect such a strong move downward, despite the fact that we had a strong CPI yesterday. So it's looking highly likely we might retrace, especially on the daily, and then just consolidate where we are at the moment. This is a major zone down here. Probably this might be the limit for us, unless there's something drastic or something new that comes up into the market. So that goes with also GBP USD or GU. If you're looking at it on the daily, same story. Let me see. I don't know why these ones are here. Okay. So just let's see where the closest support is here. We have a level over there, and then we have another level over there. Yeah. Okay. So yeah, so basically, unless we see the prospect of us thinking of hikes again, chances are we might see some sort of reluctance for people to continue buying the dollar. That doesn't mean people are going to sell the dollar. There's a difference. So unless we see news that is very convincing towards the same. So at the moment, it's looking highly likely that we might resume a ranging market for most of these currencies, unless these ones become very weak. And I'm looking at GBP USD and Euro USD. I have not talked about Japanese yen, because we are reaching very critical levels for us to look to continue buying Japanese yen. So again, remember to watch the probabilities of this Fed Watch tool. If we see that the market starts pricing in a hike, then that should tell you something about the strength of the dollar. At the moment, not quite. So we leave it at that. Let me just refresh it. Usually, yeah, it's still 9.7. Okay. Governor Bailey's speech should be on the website itself. So you just go to Forex Factory and then you select from there. And then it should come to speeches. Let's see. October. Today is 13th. There's usually a live stream. Let's see. The one for today seems like it's not being streamed. It should be here. If it's not, then I don't think it's there. Because the upcoming one is on 16th of October and 18th of... No, these are not... These are different guys. Let's see. On the governor's speech, there is nothing that has been updated on the website. So maybe it's not there. Sometimes it's also good to do your research, and yeah, so maybe it's here and it's not on the, or maybe you can just search it on YouTube or somewhere. I think you'll find it, but it's not on the official website, so I wouldn't know where else it is. And I usually don't follow these tweets because sometimes they're usually biased and skewed to one side. So that's one thing to watch out for. They might highlight specific things based on a certain narrative, which is not good when you're trying to be objective with your analysis. So try to find a credible source. But if it's not on the website, then I'll just wait for the news to come out later. Okay, now let's look at the calendar and see what's happening. Or this is tomorrow. We have another speech tomorrow. Okay, so let's just first look at the calendar and everything that has happened both last week and this week. So the better part of this week, we were expecting two things, if I'm not wrong. Those for MC. PPI came in strong, no impact on the dollar. And then here we had CPI coming in strong. And the gains gold wants to do, because ideally it should have started a downtrend. So if it has erased everything, then that should tell you something about gold. But again, you've seen the dollar regaining strength on both the euro and pound. So that should be something. However, going forward, if the dollar has already reversed, has already become weak overnight, again against gold, then you should be careful thinking it's going to continue being strong. That's what we're trying to say. It's very good to be careful. Okay. So last week, we said the CPI expectation was going to drive our narrative for the week. Yeah, without necessarily even having the CPI, the actual reading. We said you can wait for Monday. If the reaction for non-farm was confusing, you can wait for Monday, and then you see if it's going to be any better. And for the better part of the week, we had the expectation for CPI to come in lower. Yeah, so we had 0.3 and we had 3.6. And because the market was expecting a lower CPI, that's why we had this uptrend in most of the pairs. We had this market pushing back up, finding some sort of retracement first, a breather from the whole downtrend. So in this case here, we had the better part of this week from Monday till yesterday on Thursday, half of the day, we had the market going up like that. Again, employment came in, didn't have much of an impact because completely just erased the gains. And then we just had the market moving up like that. So it should be noted that if there is positive news on the dollar and it's being rejected like that, and it's if there is positive news on the dollar, for example, and it's not having a huge impact on the market, then that should tell you something about the market positioning and the expectations and how the market is pricing in expectations. Okay, so what should we expect next week? Let's just go back to this and see what we should expect next week. So I'm mainly focusing on the dollar, and then these other ones are just going to be secondary. Just 1 minute. Yeah, sorry about that. Okay, so you're going to look at what is happening on the dollar before we get into any other news announcement. So on Thursday, we had a speech this week. It didn't have a lot of impact on the markets. And that goes back to this article over here, yeah, where the market isn't really thinking that the Fed is going to raise interest rates based on this here, 9.7. So I hope I'm clear. Okay, yeah. So having said that, if you're seeing positive news not having a huge impact on the market, then we should be very careful with how we interpret anything that implies a strong dollar. For example, the Empire State Manufacturing Index, we have 4 retail sales next week, and we have unemployment. This one usually every week. Yeah, core retail sales and Empire State Manufacturing. We should be very careful with how we interpret positive news for dollar next week. Okay, now let's go back and wind up on the charts. In this case, for gold, for example, should be very careful at the current level. And I'll also be looking to see how gold reacts up here at this point, at this supply zone here for the daily. So those are the 2 areas I'll be looking to see if we can spot any corrections or any attempts for us to pause going higher. So that's number 1. UK oil, we had a range that we had drawn for UK oil on the daily. Yeah. So we don't expect oil to come down significantly. So I wouldn't be very, especially with the geopolitics that's going on with oil and everything, there's some upside risks. There's very high possibilities that we might see us going back up, especially because of the risks and the geopolitics that are happening at the moment. So, and then if you go to US 500 and UT 100, and this is UT 100 and US 30, remember these ones react based off different prospects. If we see that we might have a strong dollar, for example, or higher interest rates, then these ones might start weakening. But so far, so good. It seems like, for example, UT 100 is very resilient with regards to going low. And it's something we had talked about, that this one, unlike the other indices, we didn't really have quite a significant downtrend. And that means there's some resilience, especially with the companies that are covering this. So that's the Apples, the tech stocks, Google, and everything. So this is a very strong contender for us to have an end of year rally, because usually towards the end of the year, indices tends to rally. So it's a good candidate to look for a strong upward momentum towards the end of the year, depending on how the fundamentals are looking like. But the same can't be said for something like US 30. This one, remember, has struggled the entire of this year. We've just been on a sideways trend. And US 500 is usually in the middle of the 2. So if you want something that looks like it will continue rallying towards the end of the year, it's probably prudent to look at UT 100 going forward. Okay, now let's talk about the other pairs. CHF, JPY. Okay. So we know that generally Japanese yen is weakening. So that might provide good grounds for us to continue looking for an uptrend on this. So remember, here we are on, so I'll use that point over there, and I'll use this point over here. Now, the only time you're going to be convinced this trend has changed is when we cross below this point, which is if we have a clear break lower, then that's when you can start looking for selling opportunities. But at the moment, we are still in an uptrend, so there's still reason to believe the market might continue going higher. The only reason against that thinking is because you have this top over here. So you have a top over here. Yeah. So when you go back to the hourly, for you to believe this trend has changed, it has to at least go past the previous low for you to start believing that this trend has changed. Otherwise, this is not a convincing change of character as of yet. So that's for CHF JPY. Okay, so we've said for next week, the only thing that you need to remember is any positive news that comes out for the dollar, you need to be very careful with it. Remember how yesterday CPI came in positive, but if you look at gold, yes, it had a reaction to weaken, but overnight it has completely corrected. That means you need to be careful next week when you're reading the news. Having said that, we'll keep on doing more updates throughout the week, of course, with Rufus and Norbert. So enjoy the rest of the trading week. Make sure next week is going to be very tough because the interpretations are not very straightforward, especially with what CPI has shown us. Usually you use this market, you observe how the market is reacting to let you know how you need to organize yourself. Yeah. Again, if CPI has come in strong and gold has already overpowered dollar, then you need to be very careful next week. Having said that, enjoy the rest of the week. We will have a better recap of what has happened, especially once the geopolitical tensions are clearer in the markets. Okay, thank you so much for attending. See you all in the next week's session.